Okay, so this current global banking turmoil has raised a lot of questions on what it means for the Indian IT companies, the tech service providers like the Infosys, TCSs of the world. Remember, the BFSI, which is the banking, financial services and the insurance vertical, is the largest vertical for the Indian IT services in terms of revenue. The exposure plate will come up for you, and it ranges from anywhere between around 30% for Infosys and TCS, and it goes up to well over 50% for names like Mphasis. So these are the companies most exposed to the BFSI, the banking, financial services and the insurance vertical. So amidst renewed worry about a global banking crisis, what's the impact on the growth for IT companies? CLSA has laid out some scenarios. They're saying there are two scenarios. The first one is that we see a contained crisis with quick interventions by central bank. This will impact the decision-making of the BFSI vertical in the near term, but the impact on other verticals will be minimal. The scenario two is that it plays out over a longer term. It's a larger, more elongated crisis, and this affects not just decision-making, but it will affect the revenue growth of the BFSI vertical for 2 to 3 quarters, which means the current Q4 quarter and Q1 and Q2 of next year, and it will also impact other verticals like retail and telecom. And they're saying that this happened even in the GFC crisis. There is a third scenario, according to CLSA, in which a large, systemically important global bank fails. It sparks a wider credit crisis, prolonged global recession, but they're seeing a minimal probability of such a scenario playing out, and hence they've ignored it for now, and they're not talking about the possible impact. But CLSA believes that while there will be some pressure on the top line, margins are likely to stay resilient in both the scenarios, at least for the larger companies, as we had seen previously in F509 and F510, because there will be a calibration of annual wage hikes and promotions next year. JP Morgan has also written on this. They're saying the collapse of the SVB Signature Bank and concerns about liquidity across EU and US can further soften tech spends by banks over the short term, going up to 1 year, with slowing growth in bank tech budgets. They also say that this will impact the IT companies in two ways. One, there will be a delay in deal ramp-ups, which affects revenue conversions over the next 1 to 2 years. Two, there will be delays in deal closures, and this will play out over the next 3 to 4 quarters. JP Morgan goes on to say that they estimate the US regional banks' exposure is highest at Infi and TCS, but it's still less than about 2 to 3% of the overall revenues. Bulk of the revenues comes in from the larger financials. They estimate the SVB exposure at 10 to 20 basis points for Infi, TCS and LTI Mindtree, but it may lead to provisions. Companies may need to make some provisions in the current quarter. They also go on to say that this has driven a correction. It's taken multiple down, but estimates right now do not factor in increased EPS risk from any further slowdown in spending. Indian IT companies have outperformed on a year-to-date basis by nearly 6% because the Q3 earnings season was not as bad as people had feared. But now with the macro uncertainty rising, all eyes will be on the Q4 earnings, and that will provide the full picture of the possible impact of this global banking turmoil on the Indian IT space. Today as well, the Nifty IT index is now down 1.5%, so underperforming the benchmark indices. Well, with that, it's a wrap on Trading Hour from the entire team. Thank you for watching. Stay tuned. Halftime report is up.